The US has a debt problem, and by that, I mean a big debt problem. Right now, the US national debt is sitting at 36 trillion US dollars, and it's only getting worse. You can see that in recent years, especially right after the 2008 Great Financial Crisis, the US national debt has been growing at an alarming rate. And the scary part is that the US government can't do anything much about it. If left unchecked, this high debt could potentially diminish US economic growth, restrict government spending, and further raise the likelihood of another financial crisis. In this video, I will explain everything you need to know about this US debt, how it will affect you and me, and with Donald Trump coming back in 2025, what does it mean for the US debt problem? But before I start, do join my 10,000 members Telegram chat group to discuss or ask any questions that you may have. First up, in order to understand the US debt problem, we need to first understand the basics. So, like us, a country has income and expenses. For income, they get it through various sources like individual income tax, social security and Medicare tax, corporate income tax, excise tax, and so on. Then they use this money and spend it on stuff like social security, Medicare, national defense, health, and so on. But when they do not earn enough money to cover the expenses, they will run into a deficit. That's when they will need to borrow the difference to make up for the shortfall. And the way they get this debt is by selling government bonds. Yes, sort of like our Singapore Savings Bond, T-bill and SGS bond. But the US bond is an Angmo bond. However, unlike Singapore where the fiscal situation is very manageable, for the US, other than those few years in the late 1990s, the US federal deficit has been growing larger and larger each year. And no, it's not because the US doesn't want to spend within their means. The reason this happened is because on one hand, the government can't really increase their income by increasing taxes, as that is an unpopular move and would make people unhappy. In fact, Trump even plans to cut the corporate tax rates from 21% down to 15% when he comes into power. The last time this happened during the George W. Bush administration, it cost the government $2.6 trillion over a period of 10 years. On the other hand, the government also can't really cut their expenses. Like, should you cut the social security spend, Medicare, defense spending? But didn't Elon Musk and his Doge want to cut the government spending by $2 trillion? Even he himself recently admitted that it would be hard as the government's discretionary spending is only $1.7 trillion. Basically, the US government is stuck between a rock and a hard place. Because of that, as the US government continues to spend more than it earns, it has slowly racked on more and more national debt until it has grown to the level that it is today. But wait, that's not all. This gets even worse due to the higher interest rates. That's because while the Fed has raised interest rates in order to fight inflation, this is going to cost the US government even more money. As the government bond reach maturity, the US government will have to pay their debts back to bondholders. And they do this by rolling their debt, where they sell new bonds to raise the money to pay off the old ones. Right now, net interest payment forms the 5th largest spending of the US government. And with every rollover, the average interest rate on the US Treasury has risen to 3.3%. Net interest costs have nearly tripled since 2020. And with the Fed planning to slow down interest rate cuts in 2025 and 3 trillion more debts maturing this year, this interest cost will continue to go up even more. Also, don't forget that right now, everything is still looking good for the US. The unemployment rate is still low, GDP growth is still strong, and inflation is under control. But if there's another sudden crisis, touch wood, like another pandemic or another financial meltdown, this would force the government to spend even more money, which would raise the debt levels even more. Quick pause. Weibo is currently running a welcome promotion which lets you earn up to $600 worth of welcome rewards. But first, here's why you should check out Weibo. First, Weibo offers a wide range of markets for you to trade and invest in, such as the US, Singapore, China, and Hong Kong markets. Second, Weibo offers low trading commissions. You can invest in US stocks and ETFs from just 50 cents per order with zero platform fee during regular and extended hours. And for the other markets, their pricings are also one of the most competitive as well. Third, Webull has a ton of useful features to help you in your investing journey, such as technical analysis, fundamental analysis, analyst ratings, up-to-date news, and more. New users who sign up to Webull now will get up to $600 in Apple shares when you deposit a minimum of $100,000 by 30th April 2025, 3:59 Singapore time. Make 8 US buy trades while maintaining the funds there till 29 June 2025. Not just that, Webull is also currently running a live trading challenge where you can participate in and stand a chance to win up to $2,200. So if you are interested, do sign up to Webull using my link down below. And let's get back to the video. Now, can the US government ever default on their debts? Well, yes and no. That's because unlike many countries like Greece, Spain, Argentina, and Sri Lanka, which have defaulted on their debts before, the US is a little special due to a few reasons. One, they can issue debts in its own currency, aka the US dollar. So whenever they need more money, they can just print more money. This eliminates the risk of a normal default due to lack of funds. Also, the US dollar is also the world's primary reserve currency, meaning it's widely used in international trade and held by central banks globally. This creates consistent demand for the US Treasury securities and ensures that the government can always refinance its debts. 2. Unlike Greece and Sri Lanka, the US enjoys much more industry diversification, good access to capital, and has lower reliance on imports of essentials such as food and energy, since they can produce them domestically. However, the US does occasionally run into the risk of hitting its own debt ceiling. A debt ceiling is the legal limit to how much the US government can borrow. When the ceiling has been reached, it means they cannot borrow any more money. This debt ceiling was introduced to make sure the government is responsible with its spending. But whether this ceiling works or not, that's a different story, as the government has been shifting the debt ceiling over and over and over again. Though there have been a few times where the government came close to defaulting on this imaginary line, like in 2013, 2021, and most recently 2023, where they decided to suspend the debt ceiling until 2025, which is like this year. If ever the US defaulted, this could lead to a breach in trust among investors and send shockwaves across the world. First, equity markets could plunge as investors be like, "Sell ah!" and flee to safer assets, if ever there is any. Second, interest rates will spike as investors demand higher returns to compensate for the higher risk. Third, we will enter into a global recession as many countries depend on the US dollar for trade and the US Treasury for investment. And lastly, the dollar's dominance on global trade and finance could diminish and reduce US influence on the global stage. Though, thankfully, the risk of the US defaulting is quite small, as no one, including Trump, wants to be known as the guy who's responsible for causing the US to default. And even though the average interest rate of the US government's debt is at 3.3% now, it used to be a lot higher back in the 1980s, when interest rates shot up to well over 15%. So yes, while the debt is massively high, the cost of servicing the debt is not too bad. Also, we shouldn't just look at the debt figures alone, as there is a lot more to that than just the debt level. For example, while the US has a 110% debt to GDP ratio, Japan has a whopping debt to GDP ratio of over 260%, and Singapore has a 170% debt to GDP ratio. But this does not mean that these countries are in any imminent risk of a default yet. However, with that being said, a rising national debt could still threaten the US economic future, as it can reduce business investment and slow economic growth, while also eroding confidence in the US dollar. So realistically, what can the US government do to get out of debt? One way they can do that is by inflating the debt away. Basically, they can just print more money and pay off their debt with cheaper currency. However, this could lead to higher inflation, decline in living standards, destabilize the economy, or potentially even put the US reserve currency status at risk. Another way they can do that is by increasing the tax on the rich. Though this wouldn't help much, as this is expected to only generate around $4.3 trillion over the next decade, as compared to the US deficit, which is expected to reach $2.8 trillion annually by 2034. Then what about boosting productivity and GDP growth through technological advancements such as AI, McKinsey estimates that generative AI could enhance labor productivity growth by 0.1% to 0.6% annually. However, there's no guarantee that this will be sufficient to address the fiscal challenges that the US is facing. Ultimately, there's no easy way out. If the US truly wants to reduce their debts, they will need to have the political will to do what needs to be done, however unpopular it is. This includes reforming entitlement programs, such as making the Social Security benefit formula progressive, raising the Social Security retirement age, and raising the Social Security payroll tax rates. At the same time, they will need to increase revenue and cut spending by introducing value-added tax. This allows itemized deductions, cut discretionary spending, and cut annual infrastructure investment. All in all, the US debt problem remains a long-term issue, and it could certainly create challenges not just for the US, but also for the world. While it is valid to be concerned about this, there's no need to panic either. Anyway, that's all for this video. Hopefully, you found it useful. Like, share, and subscribe as I'll be posting new videos every Monday, Wednesday, and Friday.